This is the third part in our series on limited licence and authorised representative arrangements for accountants who will advise self-managed super funds from 1 July this year. Another area of concern for accountants is the new world of advice and the requirement to provide a statement of advice. This requires a shift in thinking from self-managed super funds being a tax structure to being a financial product regulated by the Corporations Act. For accountants that can get their head around this concept, the advisory process does not need to be overly complicated. The key issues to be aware of is the line between personal advice and general advice, as a statement of advice is only required for personal advice. And the other key issue is when a further statement of advice is required rather than a record of advice. Some accountants may be able to proceed by giving general advice only and referring clients to appropriately authorised financial planners or advisors for personal advice. In these circumstances, a statement of advice would not require to be prepared by the accountant. Many internal templates and procedures implemented by large dealer groups can be complex and go beyond the requirements for the advice provided under a limited licence. There's also been a lot of commentary about the limitations of the limited licence and potential pitfalls. However, in my view, accountants have the ability to take a practical approach and implement advice documents that are clearly focused and simple while satisfying regulatory requirements. I don't believe complex statements of advice are required for the advice given under a limited licence. Statements of advice can be client-focused, simple and strategic. There are also broader advisory opportunities as part of the advice process. As part of the initial information gathering process, there's the opportunity to delve into the client's circumstances, needs and objectives that may result in further advisory opportunities which you may not have had access to previously, such as more complex estate planning or business advisory opportunities which are identified as you go through the client's circumstances, objectives and needs. With the limited licence, you have the opportunity to become the client's strategic advisor and project manager for other areas of advice, such as financial advice from a fully authorised advisor or planner, or investment and risk products, or legal advice. Under the limited licence, you can give advice on existing superannuation, self-managed super, and class of product advice on superannuations, securities, simple managed investment schemes, insurance, and basic deposit products. This sits nicely with your role as a strategic advisor in that you're not authorised to provide specific product advice, which can sometimes result in a perceived conflict between the client's interests and those of the advisor. The other key thing that accountants are grappling with at the moment is the revenue impact of all of this. Educating clients about the cost for preparation of advice is a key concern for many of the accountants we speak with. There is no easy answer except to say that all accountants are facing the same issue and there will be a transition required to bring clients into the new world. For firms that can approach pricing innovatively, there is an opportunity to create new revenue streams. Some more senior accountants near the end of their career have indicated that given their near retirement, they just don't want to deal with this whole new world or incur the costs of obtaining a limited licence. However, the issue they are then grappling with is succession planning and the value of their business for any incoming partner that wants to grow the advisory business. The value of the business may be impacted if you don't apply for a limited licence by 30 June 2016, seeing as it will be more difficult to get a licence after the transition period ends and advisory work may dry up. Some accounting firms also have financial planning as a future aim, and a limited licence may be a good stepping stone to move in that direction. The compliance obligations under the limited licence are not as onerous, but the advice concept and framework can be implemented, so it's not then a huge step to later explore additional authorisations. Importantly, there are great options available, but accountants need to make a decision quickly. There is still time to explore the limited licence and start training, depending on your provider, but it is running out. If you haven't completed your training and lodged your application by 30 June, you will miss out on the advantageous transition relief for experience, which essentially means that if you miss the deadline, you'll need to spend 3 years as an authorised representative before being eligible to get your own licence.